Hello, everyone, and welcome to your weekly market recap. I'm Catherine Murray. We are seeing North American equity markets trade slightly lower today, unable to hold on to earlier gains. And this does follow a downtick in the broader markets yesterday. And it looks as though we might be on track for weekly equity market losses. We'll see, though. Away from that, we're keeping our eyes on Google. The stock is down by over 7% following their AI presentation. Seems to be underwhelming investors. We're also watching the Canadian dollar lower versus the US dollar. Bitcoin's down by about 1.4%. WTI down by over 1%, but that does follow 3 days of gains. And gold is down slightly to the tune of about 0.7%. Now, why the pullback? Well, we have had an incredibly strong start to 2023. And part of the reason for that was positioning. There were so many investors who sold out of their positions in 2022 only to find themselves wanting to get back into the market. So that acted as a real tailwind to the broader market returns. Perhaps that's fading just a little bit. We're also, of course, keeping our eyes on earnings results, and they're somewhat underwhelming. We've also got concerns about the outlook and company management commentary, specifically as it relates to the need to cut jobs. Disney's front and center on that. They actually announced a big restructuring to the tune of $5.5 billion today. They are going to decrease their workforce by about 7,000 or 3% of the total, but they did come in with a nice earnings beat, really driven by the results at the parks. Another reason, of course, for the market movement and the narrative is what the Fed is thinking. And Fed Chair Jerome Powell has been very clear that they are going to continue to be data dependent, but it looks as though, and the market seems to be interpreting this, perhaps the rates will in fact be higher for longer. Evidence of this is the fact that recently the peak rate from an investor perspective was 4.8%. That's actually moved up to 5.18%. And of course, the very tight labor market results that we saw last week in the United States dovetails quite nicely into the narrative that perhaps we will have these higher rates for a little bit longer. Away from that, we're also keeping our eyes on other earnings. Pepsi had a nice beat, helping that stock. And the casino names are certainly outperforming the broader market. We've got Wynn and MGM up by about 5 and 8% respectively. So you're really seeing the consumer want to go back and travel and move into the casino space. You're also seeing that that helps some of the hotel companies like Hilton. They had a nice revenue beat as well. I'd also just point stepping back for a moment to take a look at some of the stocks that have been huge outperformers in 2023. Tesla, for one, is up by 100% year to date. We're also seeing and have seen a nice rebound in the semis and keeping our eyes on those areas of the market. As it relates to the TSX, we are seeing it trade a little bit lower today. Real estate is an outperformer. You are seeing materials, energy, and financials trade lower today, as well as tech. And as I mentioned, the Canadian dollar is lower versus the US dollar. Importantly, yesterday we had the first ever minutes from the Bank of Canada meeting. And it indicated there that they actually considered holding rates steady versus raising rates by 25 basis points as they did. There was a broad agreement, however, to pause. We've got the Canadian jobs numbers out tomorrow, so we'll be watching that very closely in terms of how tight the market is, or if in fact we are seeing a bit of weakness. Now, I'd also point out, of course, the jobs numbers are somewhat backward looking. Away from that, interestingly here, the BOC did indicate in their minutes that they see inflation falling back to 3% by the end of this year. And interestingly as well, you've got Bay Street investors believing that the Fed will in fact cut rates this year. As it relates to the earnings season here in Canada, is certainly ramping up. The uranium company Cameco, CCO is the ticker there, had a nice earnings beat, setting that stock up by 5%. You've also got Great-West Life, ticker there is GWO, up by about 3% today, following a nice earnings beat there. Same goes for Sun Life, that stock's up by about 1%. And away from that, of course, we will continue to keep our eyes on the jobs results, which will come out tomorrow here in Canada.